He is.
Yes. Okay. I can't see him for some reason.
Just a second here.
Hey, Mr. Mayor, I think you're on mute.
Okay, we are live on YouTube. You all can begin your meeting. Thank you.
Am I unmuted now? Can you hear me?
Just a little bit.
What do I need to do to get louder?
That's perfect right there.
And
You're good.
if you'd like your video on, Mayor, I can have one of the technicians come down and help you with that if you'd like it on.
My video, a picture of me?
Yeah, you need to tap start video if you'd like that.
Okay, I'm looking for start
Start video. Yep.
all right. There we go.
Perfect.
Roll call, please.
I'll call finance first. Akers,
Here.
Dobbins,
Here.
Milton,
Here.
Romine,
Here.
Simmons.
It's 'cause everybody's unmuted.
It looks like he's absent. And Yancey.
Yancey's here, and I see a Simmons on there, but it's like on the mute, so maybe that's Bob.
Oh, that's
Tina.
Tina, yeah. So Mr. Simmons isn't here. Okay, Capital, Akers,
Here.
Buckley,
Here.
Dobbins,
Here.
McConnell, absent, Pinkley.
He's here.
Okay, there he is.
He's just on mute.
You're on mute. Skanes,
Here, sorry,
Here.
I was clicking here.
thank you. Skanes is here in McConnell's place. Mayor, you have a quorum for both committees.
Okay, thank you. Regular reports.
We just need to do the approval of the minutes.
Okay,
And there's 3 different minutes from 3 different times on there.
so we want to approve each one of them one by one, right?
Yes, sir.
Do I have a motion to approve the joint budget and finance and capital improvement committee meeting of June 25th, 2020?
So
I'll
moved.
make a motion. Or second. Rod can.
Second. Any discussion? All in favor, say aye.
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 Opposed, say no. Second, joint budget and finance and capital improvement committee meeting on July 10, 2020. Do I have a motion?
So moved.
I'll second. I'll second.
All right. We have a motion and a second. Any discussion? Please vote.
Aye.
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 Vote no if you don't. All right. So that passes. Joint Budget and Finance Capital Improvements Committee, July 16th, 2020. Do I have a motion?
So moved. Second.
Second. All right. Any discussion? All in favor, say aye.
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 Opposed, no. Okay. Then we have a report on the monthly sales and tax reports. Tourism tax. Alyssa.
Good morning, everyone. First thing, I just want to remind everyone that as I'm presenting these reports, you'll see our July sales tax reports and our tourism is for June receipts, but both of these are going to mostly reflect May business activity. So that's just something to keep in mind as I'm going through these. So on our sales tax reports, July receipts, we were down 45.8%. That puts our year-to-date receipts down 17.1% compared to the same time last year in 2019. It's still, I kind of looked at the numbers, looked at what we were missing as far as this spreadsheet goes, which businesses hasn't paid. It's really difficult to tell at this point what businesses just haven't paid, if maybe DOR is still behind in processing, or even if they were still closed, since it was still May business activity. We had some businesses that hadn't reopened yet, even after the board meeting that said that we were going to start reopening non-essential businesses. So it's probably going to take a couple months to really start seeing things the way that they're coming in accurately, and we'll lean pretty heavily on the rolling 12 for that, where we're actually putting those business activity receipts back into the proper month. So just something to keep in mind. Our 0.5% transportation sales tax is of course going to mirror our 1% sales tax receipt. So we were down 46.3% for the month, and that puts our year to date down 17.3%. Public safety is essentially going to be the same. Our July receipts were down 45.8% and are down 17.1% year to date.
And real quick on that one, we always like to compare the transportation to the public safety so you can really see how it's coming in. If you'll notice, there's still that about $7,000 swing, and then it's right on track. So it's maintained about that $7,000 swing for quite some time now. So I think you'll always see pretty close to $5,000 to $7,000 swing, but the rest of it will be right on track. I know, Bill, you like to see that, so I just wanted to make a note of that very quickly. Thank you, Melissa.
Moving on to the tourism tax receipts. So our June receipts for May business activity were down 73.6% compared to the same month last year, and are down 44.7% year to date. So we are keeping up with processing the tourism tax receipts. We have 2 more days basically to capture June receipts, or if there is anything left that hadn't been paid in May. So we're making sure that we stay on top of that and are reporting it accurately as far as what we are receiving from the businesses here in the office.
Can
Melissa?
everybody see the reports?
No.
I'm sorry.
No. Okay. We can go ahead and share your screen then.
Hello.
Did that pull that up yet?
No. There you go. It's
There
coming.
we go.
There you go.
Okay. Let me get it pulled. It's all right. All right.
Can you make it bigger? Just for me?
Does that look all right?
It does to me. How about everybody else?
Yeah, let me look and study this just a minute. There was a significant increase with amusements, hotels, motels, campgrounds, nightly rentals, restaurants, and concessions. But the theater still lagged. Oh boy.
Yeah. So, and this is May. So this was as businesses started to reopen. So we had, some didn't open closer until the end of May. Some were even later than that.
It seems like this is tracking with the water and sewer usage, if I remember as well, Stan and Ed, from what we had a chance to look at, that approximately 40 to 45% down in water and sewer input and output. Am I right on that? Anybody know?
Yes, and those consumption reports are on here as well. So we give you the water and the irrigation and consumption as well as the sewer. So they are down for the year. Irrigation and water is down 32% over last year. And then the sewer is down 28% over last year, consumption wise.
Let me just ask something, just to satisfy my curiosity again. The June report is basically for May, correct?
What you're seeing now is May's activity.
Okay,
yes,
thank
sir.
you.
Sorry
Thank you.
for saying that.
Can I go down a little bit on the bottom of that report so I can study that just a second?
Jamie and Melissa.
Yes.
It's Rod. Hey, listen, I suppose the question is going to be at some point in time, and it may be too early to tell, but the numbers that we are seeing now, are they tracking with what you had thought and what your adjustments were for redoing the budget when we knew that revenues were going to be significantly impacted? And then, of course, we had to make adjustments to the expense side. So too early to tell at this point? Or
Well, for right now, we said 45% down for the year for revenue. And if you recall, did I lose you? Okay. If you recall, we took the 5 months of activity. So you're going to see next week, we're going to have the August sales tax numbers come in, and we'll be able to give you what June's activity is. But right now we're about 44, almost 45% down. I expect to see that number start to taper off. I think for sales tax will be better than the 45% down. Tourism tax, I think will stay around the 45, maybe 50%. But what we're doing is when we get the August numbers next week, because we're already building the budget and all of that for next year. So when we get the August numbers next week, we are going to track it, especially with tourism, to see if we need to reevaluate the COVID financials once again.
Great. Good to know.
That helps.
Thank you.
Okay.
Hey,
Yes.
Jamie, this is John. In relation to what you just said, wasn't there one little, I don't want to say glitch, but in our 2020, when the COVID budget / the fiscal health update, if I remember right, we used the term quarantine in relation to, how long this will last. And I just wanted to see, I wanted to add on to Rod's point, if it's not so much the quarantine period that we were in the kind that phase, but this continues to continue. So that kind of, for our phrase of for every 1 month in this, it takes us 6 months to get out. My point is simply that while the quarantine aspect may be over with, we are still in this.
That is correct. Yes, and that's extremely realistic, especially as we are going through the budget for this next year. And what you're going to see is that was an estimate based off of the numbers that we saw in our cash flow, but it's turning out they're extremely realistic as far as the numbers go. Next year's budget's going to be tight. It's very doubtful that we're going to have any capital dollars for next year. But I think operations will be able to maintain with a good reserve. But then the following year, we're going to have to do some other things because it's going to be about a 24-month span. And hopefully by 2022, we'll be, full operations again, and then we can really rebuild. But as of right now, the way we did that 45%, just so that you all are aware, we did May through September's receipts, which are March through July's activity, and we zeroed those months out. So as of the end of September, even though we're getting more in right now, you're still going to be down every month. So if you look at the whole year instead of just month to month, I think that 45 to 50%, especially when you're looking at tourism, is going to be extremely accurate. I think we're going to come in to the better on sales tax. Just simply, some of the big sales stores just really were busting it out, and some of the restaurants too, as far as the drive-throughs and stuff like that. But for the purposes that you asked the question, certainly I think you're going to see it's going to take us a couple of years to get strong and back up on our feet like we need to be.
And just to kind of throw this in a step further, about the time that we would ideally be getting healthy is right around the corner of when the new Hollister Convention Center, water park, and all that is ideally being finished, which will put heavy competition not only on our convention center, but Whitewater and some of the other venues in our city, because their whole focus is get people in their door and keep them in there, right?
Yes, it will be a tourism concern for many of our businesses. So we'll have to take that into consideration as it starts to build and it starts to develop.
Let me ask something, because I looked at their operations, and they have several facilities and they are closed at this point because of COVID-19. But I also saw that their room rates are significantly higher than Branson. Anybody else notice that?
Yes.
I just wonder, they're going to attract a certain number of people. And I figured Johnny's got some sort of investment in that somewhere,
We've had that discussion quite a bit, but Johnny's rates are quite a bit higher than ours too. And he still does pretty well.
The marketplace we're looking for, if we have the comeback, once we get out of this, the pent-up demand growing, and as I mentioned to John earlier, we don't know what the number increases are going to be at that time. So if the numbers increase for people coming here, you're going to have those clientele that serve the higher priced properties, and you're going to have the clientele that will come and stay. So yes, it is something we need to watch, but is it a great concern for me right now? I personally don't have a great concern, because I think if we can get back to any kind of normalcy, we're going to see a huge increase locally in regard to it. So we'll just have to wait and see.
It really goes back to the concept of supply and demand and whatever you're looking at. So I agree with that, but wait and see is exactly the correct answer right now. So thank you for that.
Let me ask you the last question here. For if you could scroll up, Melissa, just a little bit. Just okay. With the theaters, they only basically reopened. What was the date that we took off the restriction on opening, and the governor did too? Was that was in May, wasn't it?
Yes, it was in May.
So that's really not a full month for them.
No.
And you have to remember, many of the theaters did not open at the same time.
Right.
The rest of the town was in the process, because they were still going through the whole process of figuring out how they were going to open, what that would look like and stuff. And so we still have a couple of theaters that have yet to open. So I think, what is it, the Hay Goods or one of them, they're not opening till sometime in August, so that are typically open. So it's hard to get a good reading. And then of course they're having to, it'll be interesting to see, because they're having to limit the capacity of seating that they can accommodate as well, due to the, to the distancing thing. So but those are not even, those are nowhere close to reflective, just because there are so many of them that didn't open it.
Yeah, the NOAA theater's not open yet either, is it?
I think it is. I
It
think
is?
Sight and
Sight
Sound is
open.
yes.
Yes.
And like some of our big ticket theaters, they didn't open till July 1st. So I think you'll start to see that come back a little bit. And that's why I said, when right now we're sitting at a 45% decline and we're just looking at May numbers, I anticipate June's to start coming back just a little bit. And overall at the end of the year, we'll probably land somewhere around 45% down for the whole entire year. I'm hopeful that we do better than that.
I'm a little more optimistic.
Yeah, I hope we do better, but just looking at the numbers and the trends right now, that's where I anticipate.
Okay.
Thank you.
You're welcome.
Are we ready to move on to the financial reports?
Melissa, are you finished with your report?
I can keep going through. I think we hadn't made it to the rolling 12 yet.
Yeah, let's do the rolling 12. That's important.
Okay. So looking at the rolling 12, remember this one is always about 1 month behind as far as business activity, just because we are still collecting May receipts into July. That'll be reported in August. So, and these numbers will change every month. You'll still see even 2018, 2019 numbers change.
Can you scroll up on your screen, please?
Yeah, we'll see. There we go.
Thank you.
Yeah. So you will see these numbers change as we continue to put them back into the actual business activity month. So right now, if you're looking down here at the bottom of the report, we are looking at our March numbers being down 41.5%. and our April business activity being down 61.2% compared to the same time last year.
Does this also reflect, it looks to me like, oh, that's, let me back up. My question is no, because it's for April. It didn't include May.
Nope.
Right, not yet. Yeah, I'll update that next month. So, and you will see that April amount probably change some, just because we'll still be getting in tax payments for April. So you'll just have to look at them and see how they change.
What is that first column that I can see real quick? Branson Hills. Wow. Okay, that answers my question. Yeah, go ahead.
Okay. And then on the second page of that report, it essentially shows our annual growth over here on the far right, these two columns. our annual growth in terms of retail sales. So over the past 12 months, as if our fiscal year ended April of 2020, we would be looking at a 6.9% decline in the growth of our economy, based just on retail sales.
Yeah, that's consistent with what the tourism district put out, because the TIF rose from 14% to almost 25%.
Okay. The next reports here, if no one has any questions on the rolling 12, we're looking at the 1% sales tax received. These are dollars not restricted to tax payments for the TIF district. So right now we're seeing a decrease for the month of $387,000 in spendable dollars. Year to date, we are down almost $1 million. We're at $889,000. Second page, essentially the same, but we're looking at our tourism tax receipts. So for the month, we saw a decrease of $764,000 in spendable dollars, and year to date, we are down $1.7 million compared to last year. The final two reports here, we are looking at our sales tax receipts compared to what we would typically expect to receive each month. So for our July receipts, we were down 51.2%. Year to date, we're down 17.2% of what we would have expected to receive by this point. Just a quick reminder, the way that we come up with that amount, we do an average receipt for these 5 years prior, and then compare our 2020 receipts to that average. Finally, the tourism tax receipts, we were down 73.3% compared to what we would have expected to receive for the month. And year to date, we are down 44.2%.
I'm amazed at how close you're hanging around that 45%. You know, obviously, you did some pretty good thinking and pretty good planning. As I said earlier, I am optimistic by the year we'll see that will increase and we'll get a better percentage. And I'm hoping by the year end we're below the 45% down. So we'll just have to kind of see what happens and see what the newest things that we're doing change things. Thank you.
All it takes is a good Christmas season. So if we have a good Christmas season, that would be fantastic, and it would really help our tourism numbers. You know, typically September and October are some of our lower months anyway. So we have some time to really prep up for the Christmas season and really get some good publicity and some marketing out there. And if we have a good Christmas season, that's all it will take.
Ed, from all of the other cities that I have been looking at, this is not unlike what other cities are seeing in tourism areas. It's not a myopic view of Branson, but this is consistent with what others are seeing out there. So it just is.
And, you know, as I heard this morning talking on the radio, even though our shows and they're suffering and they're hurting, but by staying open, by keeping on the track, they are looking to the future. And I'm hopeful that they'll be able to work positively with what we've done, trying to recognize that we need to have a slowing of this spread and then be able to benefit from that come fall and come Christmas season. So to date, the figures are tracking right along with your all's planning. Awesome. Awesome job.
We did budget, if you're going back to previous meetings, Jamie, what was the numbers we used? 0 income till August or September. So we're ahead basically by default there.
Well, so we did May through September's receipts, which is March through July's activity. Yeah. We did 0. But what John was stating earlier is that we zeroed those out and we are doing better month to month, but probably the stretch of the decrease will average it out over the year. And so you're still going to see, for example, your tourism numbers, even though we're doing better month to month, we obviously aren't getting 0, which is fantastic. we're doing better month to month in those periods, it's probably going to take a longer period for us to recoup. So you're still going to see some decreases in other months, which in turn will average out the year to go back to what we anticipated, if that makes sense to you.
Oh, yeah, I get it.
Melissa, thank you. Is that all you have to share with us?
Yes, sir.
All right. We're ready to move on to the financial reports then?
Yes, sir.
All right.
I'll try to move through these very quickly. We'll start with the general fund. As you can see, your taxes and franchises are down. In total, year over year, if you look at the taxes and franchise, you're down about 7.6% in the general fund, taxes and franchise fee included. So the total revenues are at 9.7 million as of the end of June. And last year at this time, they were at 10.8 million. So you're little more than $1 million down in revenue. Great numbers enough as it is. Intergovernmental or interest income is at 81% of where we anticipated. Some of these numbers are tracking at 50%. Some of them are tracking higher and some of them are tracking lower. So at this point in time, if we were a typical city without tourism, you'd be tracking 50% of your budget. So we're still not too far off the mark yet as far as the end of June. The expenditures are at 4.2 million. And then last year at this time, it was at 3.7. One thing I will note is if you look at the non-departmental, you'll see quite a jump year over year. One of the largest reasons for that number is that the insurance payment we paid in June this year, and last year we paid in July. So you'll see it's a timing issue on those two. So you'll see that come about average out again next month. The other thing to note is that your transfer in and outs, you'll see this. One of the ones, and we've already talked to you all about this, but the Branson Landing Subsidy Reserve. For the COVID financial numbers, we anticipated the $350,000 that we had put in those COVID financial. We only ended up paying for the month of June out $157,000. I'll talk to you all a little bit about that later on this morning. Is there any questions? Our ending reserve fund balance right now, as it stands, is about 6.5 million. Is there any questions on the general fund?
The interest account, is that going to show up here under general fund? Will that be another issue? The money's been taken out and set aside to draw interest. Will it show into this particular ledger?
On interest income up there under revenues, you can see, so we, just for your purposes, how we do it is we keep enough for operating at central bank. And then we sweep the rest of it out over to our investment bank because we are earning quite a bit more at our investment bank than we are at central. So we keep enough for operations. What we did is we went through, and we do this every year, to see what our highest historical month of expenses were. And then we keep that amount in that bank, and then we sweep everything over for investment purposes, knowing that in the event that we have some hardship or something like that, that we need some of that money, we keep a certain amount of that liquid that we can transfer back in 24 hours. So
how often do you sweep, Jamie?
We do it. We try to do it on a monthly basis.
Okay.
And I like to watch the cash ins and outs. We know we've got it down to a fine science. Jolynn is our cash accountant. We know that certain months we've got certain things coming. And we know if we need a little bit more or a little bit less and how much to sweep. So
okay.
The interest income, while it's down to what we made last year, it's still tracking well above what we anticipated. So we're optimistic about that.
Okay, thank you.
You're welcome.
I have a question on the rental.
Yes, sir.
A couple of alderman meetings back, some of the lessees were asking for some relief. Did that ever happen, or did that just go away?
We haven't billed some of it, so that's why that is down. So what we are doing as of right now is we assumed a reduction of 12% off the base. So we have 5 of those properties, one of which does not have a base, 4 does. But what we've done right now is we have made calls to all of those leases to find out about how long they were closed. And then we're doing a calculation. So I think that Miss Lena told me that they were closed for 2 good months. And so it's different from the tracks being closed 6 weeks. So what we did was we calculated the 2 months out of 12, and that would have been really a 17% reduction to her base lease, which would give her a little bit more help. And so that's what we're doing, and that's the route we're taking. And so some of that will be reflected in these numbers simply because we haven't built their base yet in order for us to negotiate that. Does that answer your question, Jerry?
Yes, thank you.
You're welcome. Is there any other questions on the general fund? Okay, I'll move forward to the public safety fund then, real quick. Revenues are at 2.3 million. Last year at this time, it was 2.6 million. Keep in mind, this is for the end of June. And that stays pretty consistent with our taxes being down. The expenditures are at 5.5 million. Last year at this time, they were at 5.6. One of the fluctuations that you'll see that looks pretty great is the fire department is down 2.2 versus last year. At this time, it was over 3. Last year, if you recall, that $1 million fire truck was in those numbers. So if you pull that out, then it's pretty well on trend. Okay, and then the transfer outs, we are staying on track with the very bottom, the transfer in from general fund. You'll notice it's less than last year, and that's because as a result of COVID, we decreased the transfer in by 25% for both the public safety and parks. And then we've also added the note at the bottom for the reconciling the minor funds. So if there's any questions on that, I'll be happy to answer those.
Any questions, public safety fund? Let's move on then.
Okay, the next one is the convention center. This one really speaks for itself. The 1 million versus 2.5 last year. Obviously, the convention center had to close, a lot of their cancellations. Their expenditures, though, however, they are down $1 million this year versus last year. So they have really made a great effort to try to keep their expenditures down while their revenues were also down. Transfer ins, those are pretty much a standard. That's what was budgeted, the 260, and then the 70,000 is the marketing dollars reimbursement. And then that's pretty much the convention center right now as it stands, unless there's any questions. Okay, if no questions, we'll move on to tourism tax. The tourism tax numbers for taxes and franchise, you do the calculation, it's down about 45%, which Melissa already spoke to. Interest income is down over last year. And the reason why that one is down, I just spoke to that a little bit, but we had to transfer more dollars back in to make the debt payments, and we expected that. You also see that the expenditures are at 3.8 million versus last year they were at 6.5. The chamber hasn't submitted a whole lot for reimbursement as of these financials either.
Jamie?
Yes, sir.
Are you getting any signals from them? Did they communicate with you about what their intentions are?
Yes, sir. They communicate with Sunday, who is our accountant for accounts payable. And she has a person over there that she talks to, and they communicate. And if you recall that we can't give them any more than what the tourism tax amount is coming in. Right. So we track that, and they will have that conversation.
Okay.
Jamie?
Yes, sir.
Back to the convention center. We haven't received a new budget from the convention center for this year. Is that correct?
That is correct.
You think it's a worthwhile effort to ask them so we can be in anticipation of what we're looking at for that?
I would Well, it's kind of a tricky question, and I know it's not intentional, but it is a little bit for me just simply because of COVID. If COVID weren't in the mix, then certainly, yes, I would say yes. But right now, because they were closed and they've lost so much business, I know that we're expecting them to budget and have their budget turned into us for 2021 here in another 6 weeks. So they're working on that as well. I will tell you what we're doing is we have, you know, what we anticipate giving them. We already have that budgeted and approved. So we're tracking that as well. And I guess that goes back to what would y'all like to see? Would y'all still like to see them give another round at that? I have not, honestly, I haven't brought that back up to them again. But if that is something that you all would like to see, I certainly will address that with them.
I thought we asked them for it.
I haven't, but if y'all have, I'm sorry, I have not followed up on that.
I thought we did in the meeting, ask them to get back with their budget.
Okay, well, I will have
history's
that
on.
conversation with them then.
They have a new general manager effective, whatever.
And
Really?
he's here now. Sam's here now.
Yeah.
Really?
And-
Wow.
And so we were waiting, we knew it was happening. We were waiting on him to show up to actually do the budget. Go back and try to do a budget for this year. Quite frankly, it's 6 of one, half dozen of another, because they really do have a budget. When we didn't approve their budget, it maintained their budget from last year. So that is the budget right now.
So Mark is no longer with the convention center?
No, Mark is no longer the general manager. He will be leaving officially tomorrow.
Then in 6 weeks, that's when you're anticipating that that's the time they're supposed to give you a budget for our process.
Yes, sir, so that we can effectively balance and manage their budget between our budget and make sure we've covered their losses, et cetera. So that is on our timeline. I will follow up with them though, and find out what their time frame is on this year, if they're able to do one this year.
So the gentleman that does their accounting and budgeting stuff will still be here?
To my knowledge, yes.
Because
Sir.
you're not, okay, good.
Well, does it make, since we had set it up and then we planned in our timeline to have it in 6 weeks, is it going to be important to get information earlier than that? Is there a reason that we would want to push them for that?
We push them every year to get it on our timeline because they have so many different levels of review that they have to go through. And certainly I can reach out to them and ask them for it sooner, but with a new GM and stuff, I will certainly ask them for it. And it might be beneficial, especially before the September 10th meeting. We will all, this finance committee and capital committee will have a meeting. I believe our timeline says on September 10th, if we have the availability to review our budget. So they will have to have something submitted to us before that so that we can make sure those numbers are accurate and in place. I would, that's a pretty quick timeline for them. But I will have that conversation with them. I hopefully will get to have a meeting with them, meet the new GM and talk to them about the finances.
When are we due for our next report from them on activity? Are they submitting stuff to you all about their activity and what they've got
Yes.
scheduled this summer? Okay.
So how that works is they submit to us. We've given them a timeline. So on the 7th of the following month, they have to submit all of their financials, and we ask them for a lot of extra stuff as a checklist of mine so that we can make sure that what we're putting on our books is accurate and the flow. So we kind of do a mini audit, if you will, just to make sure that what we're putting on our books is accurate. So we get all of that. Now, as far as their bookings and stuff, we don't get a booking schedule. I know with Hilton in the past, we used to. We have not gotten a booking as of yet. And I don't think we've asked them to present that. If that's something you all would be interested in seeing, we can ask them for it because I'm sure they have it.
I was
Amy,
just trying to figure.
John actually gets that.
Yeah, do you mean just a listing of events going on? I just got one today.
Yeah,
from
we
the-
get that.
Okay, that's
Oh,
what I was
okay.
trying to figure out.
Well, okay, sorry, I don't get that, but if you want it to start coming to the finance committee, we can make that happen.
No, it was just basically a rhetorical question. I know maybe it's every quarter, Stan, that they come to us and tell us
It
what's going
is.
on, something like that.
It is. They used to be monthly, but it is quarterly now because they didn't have a whole lot of new information on a monthly. Quarterly works really well for this committee.
I think it's September or October, Bill. I just don't remember
Okay.
which.
All right. Thanks. Next.
Okay, so I think tourism, we hit the highlights on tourism if nobody has a question on that one. And then we'll move through the transportation. That pretty much mirrors as far as the income goes, our sales tax and our public safety. Our expenditures are down. So that one, you're ending about 2.5 million there.
Okay.
Then we'll move through our debt service. You will see a large principal payment out for the debt service fund. That's one that I've circled to highlight for you all. That was paying off the 2005A bond. And there was an amount left in the reserve to do that. So it didn't come directly out of our fund. It came out of the debt service reserve. If you recall, we refinanced in 2015. They left that much money in there to pay off this payment. And it was earning interest. So it didn't directly affect us, but the 2005A bond is now paid off and gone. So we're thankful for that. And in a little bit, when I talk to you about the S&P report, I'll give you further explanation on some of that.
Jamie, how much does that benefit the city by this being paid off early?
Well, it's always
Approximately.
good to pay down the debt. And I think when we talk about the S&P report in just a little bit,
Okay.
I'll give you a better, you'll be able to see it a little bit better. I wanted to send the report out, but the report on it says that I probably should not send it out. So I'm going to read you the highlights and I'll read you what I was talking about. It says privileged and confidential, do not distribute. So
Well, let me ask you something. If it says do not distribute and we're sitting here in the middle of a meeting being broadcast on YouTube, is that something we should be doing?
no, sir, I'm not distributing the report. I'm just going to talk about some of the discussions that we've had with them.
Mighty fine.
And it's still a draft until after we tell them to go ahead and pull the trigger.
Okay.
Okay, the capital projects fund, I moved through the debt service. The capital projects fund really doesn't have much going on because as of COVID, we kind of cut all of the capital for the rest of the year. So the next big one we'll move through is to the Parks and Rec. The revenue is at $537,000 as of the end of June, and it was at $881 as this time last year. Parks, was hit by COVID just like everybody else was. Their pool was closed for a bit. There were some things down. I think you'll see that come back, but maybe not all the way. But they did do a good job in keeping their expenditures down. At the same time, their revenues were down. $969 this year versus last year, it was over $1 million. It was $1.1 million. So I think everybody, when this all hit and we had the meeting and Stan and John just talked to the directors about, we got to do a good job of keeping the expenditures. I will say all the departments just, I think just really kicked in and tried to do their part as keeping their expenditures down. So if there's any questions on the Park and Rec, I'll be glad to answer those. But if not, I'll just move on really quickly to the water sewer.
I got a real quick question back up on
Sure.
cigarette tax.
Yes.
That is really not dramatically affected by this activity that we've seen or lack of activity.
Right. It isn't. It's probably not affected, if I would say, based off the numbers by tourism at all.
Okay. Just an observation. They still smoke.
I'll tell you something funny just to kind of break the ice a little bit. We were going through the budget last night, and one of the things we noticed as far as Cindy's budget is the vending machines. Typically, the vending machines for the year is a little over $1,000. It's not a moneymaker, but they had healthy food in there. And so just at half year, they're well over $2,000 this year. So I asked what the difference was. Well, they put the junk food back in there. So nobody wants to be healthy in a time of stress. They want candy bars.
And
And it
Doritos.
shows in the numbers. Okay,
Wow.
so water and sewer fund. I'll move on. Sorry, that was just,
Good humor,
fun.
good humor, good humor.
Okay, water and sewer fund at 3.9 million this year, 4 million last year. They're not down a whole bunch, but if you see the intergovernmental, we got about 245,000. That is, I believe, a FEMA monies that we got back from the 2017 floods. We finally got that this year. So that's something that you didn't see last year, and that's why.
What will we do with that?
That'll go back into a reimbursement for what the water and sewer already spent.
Gotcha.
So FEMA gives us 75% of what we spend 100% on.
Thank you.
You're welcome. And then that's really the income statements. If you'll see at the very back, it's not much to talk about, but the internal service funds, we started submitting the reports there so that you could see what's going in there and how much that we have. But we kind of put a hold on that as of COVID. So they're going to pretty much be stable until we're able to put some more money back in there. The next one is the cash by funds. And you'll see that we have the operating one is, sorry, Melissa, I know you got to catch up. The next one is the operating fund. And
I can't scroll that fast, guys. I really can't. I'm trying.
There you go. Okay. So the operating fund is essentially, you'll see, this is the cash by fund report. It tells you the cash balances with what we have in the bank. Those are all the funds that go into our operating fund balance. The next one is the tourism fund. And then the next one is the public safety. So essentially, our special revenue funds, our major funds, we separate out, and you'll see what it balances to the bank.
Just a second. Let me ask something,
Sure.
because I think it's very important, since this is out on YouTube. There is no money being used to supplement or supplant in any of these reports that goes from public safety back over to general funds, right? I'm just making a public statement.
No, sir. It goes from the general fund to the public safety.
Thank you so much.
And right now on the public safety, you'll see we're splitting out for internal purposes, police and fire. So we have a tracking on that. You'll see that through these reports as well. The next one is the balance sheet. And remember, I always tell you how you can check us is make sure that the income statements tie back to the fund balance of the balance sheet. And then you can also use those cash by funds to follow the cash through to make sure and tie all those three reports together. The balance sheets pretty much speak for themselves, but if you guys have any questions on that, I'll be happy to answer them. It just pretty much tells you your cash, your accounts receivable, your liabilities, and then the fund balance.
Okay, any additional questions?
I'm just thinking that we're better off than I thought we'd be. And it's just a general overall assessment is all.
I believe that's a good assessment as of right now. So.
So we're basically what we're saying on that water and sewer fund, we do have enough revenue to take care of the issues that have been brought before us already in our discussions and
So
valve replacements and stuff.
So the thing that we need to keep in mind is that the COVID-19 financials is what we need to be operating from. And I will speak to that here when I get to the S&P discussion. But one of the things we don't need to do, and this is my recommendation only, but we need to make sure that we're sticking as closely to that COVID financials as we absolutely can during this time period, which means no more capital and those kind of things for the rest of this year. And I can't state that enough, especially when I'm going through the numbers for next year. So John stated it early, and I've stated it several times, but for every month we were down, the city's down, it's going to take us at least 6 months to recover. And we're seeing that through the numbers that we're trying to balance for next year. So just always keep in mind, we can't stray far from those COVID financials. And if there's a need that arises or something inadvertently breaks, then we probably should look at the financials to find out what else is in there that we could do without to replace that, just to keep a good balance on the COVID financials.
Well, we wouldn't be doing that unless staff brought it to us anyway, correct?
That's correct, yes.
Okay, are we ready to move on?
Okay, the next one is just those, the reports, the new reports that I started putting in, and really, excuse me, those are really for just your information to kind of keep you up to date as to the finance department, what we're doing and how we're tracking things, and new licenses versus renewed licenses, and the consumption reports that we do with the water, sewer, and really our bid packets. I don't know if those are beneficial to you all or not. I just felt like that this year we needed to add to it so that you could see everything that goes on within our department. And these are some of the reports that we generate and that we review to make sure that we're staying on top of things. That's really all I had to say, unless there's any questions about it.
I just want to study this water consumption thing just a second, or just, I don't have to. Melissa, will this be sent to us?
I think it already has, but I will resend this to y'all again if you want me to.
I just don't remember.
Via email. That's okay. I
Thank
can
you.
send this report to you via email. I'll send it when we're done here.
Thank you.
You're welcome.
It's a very lengthy email that we
You
got.
bet.
Yeah, took up a lot of space on my phone.
Sorry, it took me a second to get unmuted. It is on the agenda, and it's on the Budget and Finance Committee agenda.
Yeah.
Okay, thank you. Never mind, as they say.
Do we need to do anything else under department reports?
No, sir, that was just really for information. The next one is the disbursements.
All right. Item 4, review of disbursements and approval of disbursements 15,000 and over.
And these really are self-explanatory, but if you would like any questions, I'm happy to answer those.
This is nothing unexpected, correct?
Correct.
So this is Rod. I would make a motion to approve as presented then.
This is Pam. I will second.
Got a motion and a second? Any discussion? All in favor signify by saying aye.
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 Opposed, no. The ayes have it. All right.
Thank you.
Review of the tourism contingency fund.
Okay, we had an application for contingency funds from the Branson Chamber and the CVB. So just to give you a little history, we budget $125,000 every year for the marketing contingency funds out of the tourism, which then we have an application process that allows nonprofit or not-for-profit businesses to apply for this money. It's pretty lengthy and pretty detailed, and that money goes back to 125 every year. We haven't had an application, to my knowledge, this year at all. The CBB and the Chamber submitted this application, and this is for, they did a presentation of the software that has been highly requested, especially due to COVID, a couple of months ago. This is for the one-time payment to help them pay for that software to get it up and running. They were very detailed in their application. They gave really good answers. And as I said, they're wanting 75,000 of the 125. And Rachel also put in their presentation again, it's real-time numbers that she had stated. And they also gave their 501c6. So I think they've met the qualifications of the application. It would just be up to you all to say if you want me to push this forward to go to the board or not. That would be at your recommendation.
My question goes back, is this not the tourism district's responsibility for this stuff? It's just a question. It's been a long time, guys. I don't remember them ever coming to us for software stuff before. What's the purpose of the software?
I mean, I think it's a good marketing tool to market Branson and for real time to talk about the tourism and how the tourism comes in and they show, I mean, you can go out on their website and look at real-time numbers and real-time data, which is beneficial, I really think, to market Branson and to show the activity and what's going on in Branson.
Bill, do you remember when the two young ladies came?
Yeah, I do, Matt.
That's what this software is that what you saw there, it shows how in more real time, how the people are visiting which shows on which days at which time. And it lets the public get that information, especially our business community, get that information a whole lot quicker instead of having to wait for companies to go out and do the surveys and bring them the data.
Is this a shared cost? That goes back to my question. Is the tourism district picking up some of this? That was the intent behind this. They would pay some of the stuff and we'd pay the some. Are they asking us to pick up all of it? Because obviously the stuff's needed, you know?
Well, I mean, there's going to be an ongoing cost to this, and they're not requesting that. They're requesting a one-time $75,000 payment for assistance, because the point of this application and how that works is it really can't be used for ongoing operations year over year over year. So in other words, a company can't come in and apply for the same thing year over year over year. It's a one-time.
I get that. I get that.
Jamie, do we know how much the software costs, the whole package? That would maybe help answer this question.
Yes, it would.
I know I had a conversation with Rachel, and I know it started off well over 100. She was able to get them down. I will ask her and get that out to you. I think she's probably listening or watching, but she probably can't speak. So I will text her and get that out to y'all as soon as possible. But I know that she told me she was able to get the cost quite a bit down, but I don't anticipate 75,000 being 100% of the cost, but I'm not sure. And I don't want to say that for sure until I ask her.
Go ahead.
No, go ahead, Bill.
They would be coming from the whole board, making a presentation as well on this, if it does anyway. So
yes, sir. Yes, it'll go from this board upon your recommendation, and then it'll go to the Board of Aldermen.
Okay.
In fact, I have it on the agenda already because we have to submit it to the clerk's office by noon today. So I have it on the agenda for anticipation, but it's something that I could have pulled off if it wasn't your recommendation. But I know they're trying to get this in place, so I kind of wanted to get it timely. So if you all approve of it, then it'll go to the board, I believe, August 7th for another look at that.
It's something that's been sorely needed. Our data lags. So, you know, I'm not against it. I just like to see that if the tourism district is sharing the cost or the board's picking up, the city of Branson's picking up all of it. It's just a question.
Sure. And I'll ask for that.
Hey, Jamie, I just got off the phone with Rachel. 75 is the total.
75 is 100%?
Yeah.
Okay.
Hey,
Well, Rachel twisted some arms, didn't she?
And this is Pam. I just want to, I don't know if we're voting to move this on or it's just a recommendation or how, but on full disclosure, I serve on the board for the chamber and CVB. So I am going to abstain from any recommendations, approvals, votes, whatever on this. So.
Okay. Thank you.
This is Larry.
Yeah, go ahead, Larry.
Thanks. I agree, this software is desperately needed. I'm questioning the 75,000 coming out of this fund. I'm told that DBBA is talking about asking for some funds out of this for their Christmas season. I guess I'm questioning with the lack of marketing dollars we have this year, if this money wouldn't be more beneficial for our city, for example, DBBA or even the veterans to have some funds for some extra marketing for the end of our season.
How much is in the contingency total?
Total for 125, yes, sir.
Okay.
If I'm not mistaken, I saw a preliminary study that deals with geocaching, which is really locating where people are from. They can tell the people that have the tendency to want to do certain things. I believe that study is a part of this to try to make sure that we can target market as specifically as possible. And it picks up information on people that go online and their tendencies to what they do. So I think it's good that we have them give us a full report. If any part of that is that 2021 program that they have, it looks like it's a very futuristic approach to look at how we get people here and how we specifically market to people for this area. So I'd encourage us to send this on to the board and have them make a presentation.
And
Go ahead.
what I would recommend with that, while we're in the process doing it, I agree, we need this software, but I'd recommend that we talk to the chamber and say, hey, why don't you guys reach out to the TCD and see if they're willing to take care of part of this as well. And then that, I think, makes it more palatable for our board as well as our citizens.
It does.
Okay, will do.
That sound good to you, Larry?
Yeah, thanks for making that recommendation, Stan. I just know that obviously, like you said, the software is important. If we could share the cost with TCD and keep as many of these dollars for our marketing that we can.
Yeah, that way I think it's this tool will be used beyond the city limits of Branson, quite honestly, throughout the district. But that way it seems to be a more shared and equitable way of doing it.
I agree.
Okay. I'll reach out to her and let her know. Do you still all want it to go to the board on August 7th?
I do.
Yes.
Okay.
I would make a motion that we approve this to move forward to the Board of Aldermen.
John Akers.
Hi, John.
Ed just seconded that motion with a ding, huh?
This is Rod. I'll second that motion. Rod will. I think I agree with everything that's been said. We need to move it forward.
Okay.
So far, I've only had telephone calls. That was on my first. All right.
All in favor, huh?
We've had a motion and a second, Mr. Mayor.
Aye. All in favor, say aye.
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 No? The ayes
Don't
have it.
forget, Pam abstains.
Okay.
Pam,
Thank you.
Pam, you can't abstain. If you abstain, it needs to be recorded as a no vote.
Oh, my. This is a recommendation from this committee on to our board. So thank you. Discussion of the S&P board rating report.
Ed, let me just make a point. This was a true conflict of interest as defined by state law, so she could abstain.
Alrighty, let's move on. S&P report.
Thank you. Okay, so we had another rating, and I think I discussed what was coming last time with you all, but I want to just kind of reiterate a few points here. We did get a draft of the S&P report. We did have a bond rating call with them. Prior to that, they had downgraded many of the tourism cities across our country just as a result of COVID and largely being tourism, knowing that there's going to be some that are going to be hit harder than others. And so we had an A stable rating, and so they put us down to an A negative originally, and then we had the call with them. The process works is this: they reach out to us, they ask us many questions, they go through our audited financials that we report to them on an annual basis. They look at all of the criteria. They did reach out to me and asked me what we were doing as a result of COVID. I showed them what we were doing, then I sent them the COVID report, and then we had further discussions on that. So that's kind of the way the process works. And then we have a formal rating call in which they ask us a little bit more questions, and then we go through some more ideas and what's going on with our city, and then the committee meets and they vote as to whether or not they're going to downgrade us even further. I will tell you, I was thankful that what they did was they lowered our rating to an A- negative. And so instead of being an A stable, we are now an A- negative. But I was thankful that we did not go to a triple B, which, you know, it was worse. So this was, while it's not great news, it was at least a good compromise. So I was thankful that it didn't drop any further than that. One of the reasons why they dropped us further is because of the Branson Landing bonds and the fact that we had to contribute some dollars to them to pay that debt, because it is a TIF and that TIF is city backed. So that's how they determined our results. I will tell you, they said many times in their report that we need to be cautious and careful. And I'm going to read just a little bit. Revenue performance in the Branson Landing area has been sufficient for debt service requirements in recent years. However, if the revenue performance is to significantly deteriorate, they're going to do a further rating call. I don't think that will be the case. So I'm thankful for that. The other thing that they talked about, and they said that this rating also reflects really strong management with good financial policies and practices under their financial management assessment methodology. It also says adequate economy with market values per capita, 136,365, and they projected effective buying income at 78.6%. I'm not going to read all word for word, just in the event to honor the confidentiality, but I kind of wanted to just to let you all know the overall outcome could have been a lot worse. And one of the things that they said to us is that we need to make sure that we're sticking to our new financials that we've presented to them. And I asked them a question. I said, when is our opportunity to get it back to our A stable or even improve even further? And their answer to me was, I think that when 2021 is done and you have your financials out there and presented, that'll be a good time to come back and do another rating to give you a good solid year behind your belt and to see how the economy improves. So that would be probably July of 2022. So with that being said, I think it's it would behoove us to just really be cautious of our spending and certainly going to the financial market during that time period would not be a good idea. This is my recommendation. It's my recommendation based off of my conversation with them. We don't need to acquire more debt during that time period, but I will remind you that in 2022, the rest of our tourism bonds will be paid off. So that'll be another really good positive thing under our belts. And I think July of 2022 would be a great time for them to rate us because our debt will be lower and we'll have a great 2021 season under our belts, which we will project conservatively and anticipate coming in better than anticipated. So
Jamie, just
yes,
quick,
yes.
because we are broadcasting this, how much would that save us on paying off that particular bond on a yearly basis, just off the top of your head?
What bond are you referring
The one
to?
you were just the last one you were referring to that's going to be paid off.
The tourism bonds?
Yes.
There's a couple of them. I'll have to get you those numbers. I apologize. I don't know that off the top of my head. I just know January of 2022 is the last payment, but I will certainly pull that up and get that for you.
it's substantial, is what you're saying, basically.
Yes, yes. I want to say, I don't want to say it. I'll pull it up and get you the accurate number because I don't want to be wrong.
Yeah, don't, let's not go there.
Yep.
Let me put it this way, Bill. They were very pleased with our, the debt we're talking about is old debt. It's been around for quite a while. They were extremely pleased that we have started addressing it in a more aggressive, and they are watching that closely. Let's just put it that way.
Jamie, this is Larry.
Yes, sir.
I just wanted to say, I'm taking my hat off to you. High compliments for replying with the information you had, because going from an A to an A- during these times, I'm going to say kudos to you.
Well, thank you very much. That means a lot. It took a combination of all of us working together. It wasn't an easy time for anybody, for any of our city, and we recognize that. So whatever we can do to help, we are happy to. One of the things that I will reiterate on that is when I said the 2022 bonds will be paid off, and for tourism, you will still have that COP loan out there, but those are not bonds. So I just wanted to make sure that you all were aware of that.
Thank you again.
You're welcome. Thank you for saying that. And I will, if there's any questions or anything else, I'm happy to answer those. But I just wanted to really drive home that when I say we need to really watch what we're spending, it's not out of me wanting to control anything. It's more out of me trying to protect what we already have in our bond rating, because this has been a long period, and it's something that we feel responsible that we need to watch, and we really need to keep everybody on track to say, if we can just really watch our spending, take care of our greatest assets, which are our people, really watch our spending for other things and get through the next year, I really think the city will come back, and I will be very thankful. So when we say it's important to really watch that for the next budget, you all will see what's coming. But when we say that, it's more out of a necessity of a bigger picture, if you will.
No, go ahead. Go ahead.
I was just going to ask if she would send those numbers, because I think they are large. I'd like to see what those amounts are.
For the 2020, for the bonds that should be paid off?
Yes.
Okay, I'll send you the, we have a reconciliation spreadsheet that I could probably cut and paste you for the tourism and send it your way.
That'd be great. Thank you.
And on the other side of this, we're trying to basically prepare you for the fact that our 2021 budget is going to be extremely frugal. And
I figured that.
We just have to be, and it's not to hurt anyone. It's to just, we have to take care of the city, and that's what we're trying to do. And we'll get through this together.
Yes.
Yeah.
All right. Are you ready to move on to the project status report?
Yes, sir. Thank you. This is just that report that we track our two large projects for the Highway 76 and the downtown. Not a ton of activity that has gone on. So what we're sitting at is the downtown is still sitting at a total project to date spend of 12.8, and the Highway 76 is at 22.9 total project to date. One thing that I wanted to talk to you all about on this one is, as you all know, we're going through our audit right now, which is typical, and I've had some discussion with the auditors, and so I'm giving you a heads up on this. Not that it's a problem, but it is something that I don't think that we agree on, and we'll get to that point. These two projects are not complete. Even segment 3 for the Highway 76 project is not complete. And so what we have recorded them at is they are currently in CIP, which is construction in progress, and that's where we have them set. And so for 76, it was divided up first in phases and then in segments. And so when a segment is completed, then what we do is we take it out of construction in progress and we capitalize that. Well, the auditors came back to me and they said, well, we think you should capitalize it since there wasn't a lot of activity, and you should capitalize a portion of that. Well, my response to them is, well, I will capitalize when a segment is done, then I will roll it over and capitalize that. That's how we know by segments. They said, well, since there's not a lot of activity, you should select a portion and capitalize it. For me, that's not cut and dry, and I have to have guidance for that. And the guidance was by segments. And if a segment is not done, then it's still in construction in progress, and that's where it will stay on our financials until such a time that one segment is complete, and then I package it and then I roll it to being capitalized. So that's kind of where we stand. I understand where he's coming from because he's looking at the dollars. We didn't do a lot of dollar value, and we didn't do that because we put a hold on these projects. But from my standpoint, if one segment is not completed, then I don't capitalize it. It's still in progress until such a time that that is completed. I talked with Keith Francis, our city engineer, to just to make sure we were on the same page on that, and we are. He agrees with me, and it's not an argument or anything like that. Certainly not that to that level, but it is something that we are going back and forth with to determine if he wants us to capitalize a portion of it. For me, it's just a matter of it's not cut and dry. I can't just select one portion and capitalize out of a segment. I would rather the segment be complete before I capitalize it. I'm just giving you a heads up. It's not really anything that is concerning or anything like that. I just kind of wanted to keep you in touch with where we're at with the audit. I'm working on the CAFR right now, compiling all those financials. Hopefully I'll have that done, but that is something that's still open-ended that we have not yet agreed on.
Jamie.
Yes, sir.
What is generally accepted governmental accounting procedures for dealing with something like that? I mean, this is not the first time something like this has been encountered. What rules do you follow?
Well, and that it stays in CIP until it's completed. And at such time it's completed and put into service, then it is capitalized. That is really general rule of thumb. But then it's really basically up to the internal processes of what segment is complete. I mean, what portion do you capitalize? So for me, we segmented those projects out. So the internal process for us, and I discussed this with the auditor, the internal processes for us is we have that particular project segmented out for a reason and a purpose. And we will, every time a segment is done and completed, we roll it over to capitalize. And that's what we've done. Our last auditors had no problem with that, and we were good with it. It's just a preference on the audit firm is what it is. But for us, I want to maintain what we have done and follow our internal processes here. I don't think either it's not against GAAP. We are still following GAAP. It's a preference on what portion they believe that we should capitalize and move forward. And that's really where we're at. Both follow the GAAP process.
Well, my question goes back to, you've been audited on it before, and you just sort of, I'm not saying it disturbs me. I don't want to see our policies change because of the difference of opinion from one auditor to the next. If it was audited last year and it was done accepted, then it should be done the same way this year.
Yeah,
and I may be off, but go ahead.
I'm sorry, I didn't mean to interrupt you. I think there's a bit of a delay, but we had the capital audit, and we've been through at least 2 years of other auditors. So I don't have any intentions of changing our internal process. We'll get to that point, but I just kind of wanted to tell you it's open-ended. We have a good relationship with this auditor. It's in by no means to attack or to put down any audit firm, but we have a good relationship with him. So I know we'll get there. I just kind of wanted to tell you what the open-ended items and the discussions were about. I just really don't, I feel strongly that we started off with the segments and phases, and that's the way we need to continue, and we'll get there. I just wanted to make sure that everything is up front and out in the open for y'all to know about.
Hey, Jamie, can I ask a
Yes.
question?
Yes, sir.
Only because of my tax background. When you have a segment and it's work in progress, and he's saying that he wants you to capitalize it, so I'm assuming then, is he saying that he thinks that that segment is complete in terms of part of it was put in service where cars are driving on the street or water's going through the pipe or something? Or is it clearly work in progress and nobody's getting benefit of the work that was done to that point?
No, I think what he's saying is there's a portion of the segment that he would like to see us capitalize, and the portion of that segment, he did mention the water sewer pipes that were done. But if you go off of that, then how much, my question back to him was then how much? Do you say a quarter of the project is done, so you capitalize a quarter of it or a half of it, or at what level do you do that? And that's why we do it in segments, so that we have guidance as to, okay, this segment is complete. When the engineers say, yes, no more work will be done on that, we have completed that, then we will package that and move it to capitalizing that, which makes perfect sense to me. But otherwise, then you leave it up to us or up to our auditors to say, well, we see that this has been in service and these water sewer pipes have been in service, so you need to capitalize like a quarter mile or something. That's just an example of that. And we don't have the quarter mile. That's not guidance. It's more of an internal policy. So we'll get there. I just, I kind of wanted to leave it up, just tell you all about it.
Well, I see where he's coming from. So good luck, and I wish you the best.
Thank you.
Are we ready to move to your report, Jamie?
Certainly.
Right.
So I talked about the auditors. The one thing I wanted to talk about, just to let you all know, the modification for the energy performance loan is complete. It's all done. We're going to save $85,000, and we shortened that debt 3 years. The payment will be higher for the next 3 years, but in total, in doing this, we've saved $85,000, and we shortened that debt for 3 years. So that goes a long way to paying off our debt. So I'm very thankful. So thank you all for that. We are in talking with the bank on the housing authority, and we're going to get that done hopefully by the end of day tomorrow. So that's moving along. And then our budget, we sat in here last night and we're working to balance that. And we're going to start having directors budget meetings with the administrators the first week of August. Next week, actually one starts Friday, so we're moving towards that. The other thing is for September the 10th. That is when we have scheduled on our timeline to review the budget with you all. How does that look according to your calendars?
Jamie,
September,
what was that one more time? I'm sorry.
September the 10th. We currently have 10 o'clock, but we can be open to whatever time fits best with y'all.
I'm good, Jamie. Pam.
Okay.
This is Rod. I'm good with that as well.
Okay, thank you. Anyone else? Y'all have any conflicts?
I don't show
This is Larry. I'm good with it.
Thank you. Okay.
Well, that's my fishing and drinking day, so I don't know.
Yeah, right.
I'll get and make it to that meeting.
Okay, so we'll say, and we'll send out notifications for you all, September the 10th at 10 o'clock. And that meeting will be strictly for the finance committee to review the budget. It won't be about all of these things that we just went over today. It'll just be set for budget purposes to talk about what we're doing. And then, as you know, that we also have another, with the whole board of aldermen, the finance, the capital, those committees come together for a special meeting. Tentative timeline for that would be September the 24th, but we always typically like the finance committee to see it and review it. You get to discuss it first before it moves on to the special budget meeting. So we'll be sending out availability for that special budget meeting here in the next week. But tentatively, that is going to be around the end of September, close to the 24th. But for y'all, the September 10th at 10 a.m., we're going to get that out for you tomorrow so you have some time. We don't have the budget done. We don't have it balanced yet, and we haven't discussed it with the directors, so you won't see that until closer to the meeting. But we'll get that out at least a week ahead of time so y'all have time to review it. And with that, I think that ends my report. Unless you have any questions for me or you like for me to do something, just please let me know.
Any additional questions or comments?
This is Michael. Jamie, I'd like to thank you for a really great presentation, and Melissa, you did a good job and great questions by all those attending. And I apologize for not really being much involved with this, but I have roofers up here and I could barely hear they're hammering up here right above me. So I apologize for that, but actually you answered every question that I had as you went along. So thank you very much. And I look forward to the next meeting.
Thanks, Michael.
Thank you. I want to thank you for the budget planning meetings that we had, and I appreciated being involved and the number of people that stayed with it. It's a good process, and I appreciate it. So the next meeting that we will have will be September 10th. Are we having something in between?
We'll have a finance committee meeting at the end of August. Okay. It should be the last Thursday of the month at 10 a.m. Let me see, we're pulling up the dates. Is it the 27th, I believe, of August is a tentative finance committee meeting at 10 a.m. And that will be going over all of the numbers as we did today. I just wanted to share the September 10th meeting just so that you could start planning for that as well.
Will the CVB be presenting at our next Board of Aldermen meeting on this issue we just discussed?
Yes, sir. I have it. We've already got the staff report and the ordinance ready to go for the agenda for August 7th. I will have to reach back out to her and ask her to maybe adjust her numbers after what I've heard. Okay. So I'll have them present that. That's all their information.
Thank you, ma'am.
You're welcome.
Floor is open for a motion to adjourn.
So moved.
Motion to adjourn has been made. Is there a second?
Second.
Second's been made. All please vote aye if you
Aye.
Aye.
Yo.
Anyone want to say no? We've eyed it. We're adjourned.